our client that we're sitting with is, how do you define what is lump sum? So I want everyone just to write down what they would consider as a lump sum to themselves. Just put down, if you were sitting down with me, I start saying to you, I start talking to you as a prospect, and I'm going, oh look, I'm not sure if you can help me, I've got a little bit of a lump sum, I'm not sure, how to invest that, or maybe I could just go and I see there's some apps I can go download and do some trading myself. How much in your mind are you now thinking that maybe I have to invest? Just a ballpark.
20k.
20k, thank you, Andrew. Yeah, Alice, yeah, 20k, yeah. Lewis?
Could be as little as 5k, depending on what it is.
Yeah. Divya?
Same, it could be a small amount, but the fact is that it has to be invested at once and not monthly payments.
Someone could do multiple payments as lump sums, that's right.
It's just a pot of free cash. It could be when you do a fact find, it could be money sat in a low interest savings account.
Yeah.
And so you'd identify that and say, what's that for? If it's just sat there, you could say.
Sure.
You
Yeah.
could say to a client, let's do something with that, and I can get you a better rate.
Yeah. What I just wanted to show there is, when someone says to me a lump sum, sometimes I think, oh, excellent, they've got 50 grand to invest. But the reality is that they might have 5,000, so let's say 5,000 USD, which to them is a lot of money. And so it's just being prepared is kind of like trying not to form pictures that when you sit down with someone, that when they say they've got a lump sum to invest, that you might be thinking, excellent, I'm onto a good prospect here. And then when you go through it, and you're going through the fact find and you write down how much they've got in their bank account, and let's say it is simply, they might have 10,000 in there. Because the certain thing is we're definitely not going to look to invest everything that someone has saved in a bank account. So the important thing I was just trying to get across is when it comes to lump sum, don't have a preconceived idea about that, how much they might have to save. Now, yes, part of today is around platforms, but I just want to talk about lump sums first of all. And next week you have a session with Reese around portfolio bonds, where there is a minimum to be able to do a portfolio bond. And the key thing about that is the other thing to consider is, let's say I did have 100,000 to invest. Is platform the right decision, or is a portfolio bond the right decision? Okay, so if we consider myself as a New Zealander, that I'm looking to go back to New Zealand to retire, is 100k, quite often we will instantly think about doing 100k into a portfolio bond. But you just need to actually look at it from the client's perspective. So always put the client first. What's going to be right for when Joe goes back to New Zealand? And over time you'll find that doing a portfolio bond for Joe is actually not worthwhile. And that just becomes, there is no cost benefits at all for me doing a portfolio bond. In actual fact, for me as a client, which I can still earn a service fee from, a better option would actually be investing on a platform. Okay, so the key thing is that, yes, right here, we might do a lot of portfolio bonds. You individually might be thinking, oh, we've got 100 grand over there, I'm going to earn £3,500, fantastic. Then I can look to how I might invest that for the client, as well as we'll get an ongoing revenue stream through that, through putting around a service fee. The key thing is always consider, in terms of do it from the client's perspective. You do right by the client, and they'll be a client for life, and they will refer you to other people as well. So always consider, it is, it's great in terms of when you meet someone who's going to go back to the UK, or is British, may not go back to the UK, and for those who've been in investing will understand around inheritance tax planning, portfolio bond is fantastic for that, and you really want to get that clock ticking. But of course, Reese will cover off on a lot of that next week. What I just wanted to really get across is that when it comes to a lump sum investment, is it could be portfolio bond or it could be platform. You could be looking to put on a platform 100 grand, 200 grand, 500 grand. Or it could be 5 grand, 10 grand. Okay? Now, of course, with lump sum investments, what type of investment you might want to use comes down to is asset classes. Correct. Give me 2 asset classes.
Mutual funds.
Under equities, yeah. And
Structured notes.
that would kind of loosely come under equities, yes. Commodities, yes, absolutely.
Property.
Bond, yes. Property, yes. And alternative investing. Okay, alternative investing here is where I'm talking about cryptocurrencies. Okay, we've now got an ETF around cryptocurrencies, but it's also cryptocurrencies. Now, a lot of the stuff that we've done in the past, and of course, we do have a crypto app ourselves. Who here's downloaded the crypto app? I do. And I have money on that. And every day it tells me I'm down.
I have a client with a crypto and it's been down.
It's okay. But what do you think the time horizon for cryptocurrency is?
My opinion?
Yeah, in your opinion.
Long term, yeah.
Yeah, I agree. Yeah, cryptocurrency, in my opinion as well, it's not about the short-term gain. It's actually about the long-term gain. But if you did want to know more about cryptocurrencies, there's a gentleman in my team called Will Bailey. He is an absolute star with cryptocurrency and has done very well with cryptocurrency, but has a lot of it, he tracks it all the time, he knows what's going on, to the point when new stuff is coming out in regards to different currencies and so forth. And what I mean by that is like when there was some, like Ripple, when there was some issues around Ripple, he kept me updated because he knows I've got Ripple, and Ripple I did do well on because I was fortunate enough to get in at a good time, whereas got on the wrong tail when it came to Cardano. However, if you want to know more about cryptocurrencies, please, I'm in the room that's opposite Greg, thank you. So, you know, feel free to come in and have a chat to him.
So what's the second name? Will?
Bailey. Yeah.
We're
Yeah.
actually the initial investors into Ripple 2018. Yeah, so it's quite interesting having to see that they're doing well now.
Yeah. Yes. Yes. Okay, and then the other thing that I don't think any of you has actually mentioned just in the last asset class is cash and cash equivalents. It's a money market. And some of the pensions, so if you end up, you know, inheriting a client who has the platform is Providence, so the bond is, the cash sits in the money market there. So of course if a client does actually have money sitting there, it is actually earning some interest there. So yeah, so all up there's 6 asset classes. So if you wanted to note that down, so you got cash and cash equivalents, fixed income, so government bonds, corporate bonds, equities, real estate, so not just physical real estate, but also real estate investment trusts, so REITs. Okay, and of course REITs, you can invest in REITs within lump sum investing that we do. Commodities, and then, as I mentioned, the alternate investment, probably the most relevant one there is around the cryptocurrency, but it also is private equity, capital, venture capital and hedge funds, which at the time being, private equity and venture capital, we don't do as a organisation. With...
Joe?
Yes.
One more time, just, I'm missing one.
Oh, sure, yeah. So cash and cash equivalents is one. Then you've got fixed income, so that's your bonds, yep. Equities, your mutual funds and so forth would fit into that. Real estate, commodities, and then alternate investments.
Okay, got it.
Yeah, okay. So it's important to understand the asset classes because obviously once a client has agreed with you that they're going to go, looking to invest a lump sum with you, is ensuring that you've got diversification for the client. Ensuring you're looking to manage their risk. So I mean, obviously in the first part of, when you've gone through the fact find, which you would have gone through the fact find with Claire, as well as I'm sure that Paul Tweedy would have covered off on this, and possibly also you had education, retirement planning education, Dan Barron, that you probably know this fact find. And in actual fact, some of you are already doing business, so you probably are already a whiz on the fact find. It's really important to understand someone's risk, okay? It could be that you're sitting down with myself and I go, yes, I've got 20,000 to invest. And then you're at the back of your mind, you're thinking, well, 20,000, okay, well, how am I going to invest that for Joe? You've already established that, well, with 20,000, you understand next week, is that a platform's a better option than a lump sum because I'm not investing enough to be able to open a portfolio bond, if that was right for me as a client. Is then, how am I going to then look to invest that? So, of course, with that is you need to have some kind of understanding, not only what my risk tolerance is, but also what's my time horizon. Okay, I very much say when I meet a new prospect is I always say to them, as part of my pitch, is I help clients with medium to long-term investing. Sorry, if you're after a short-term investment, that's not something that I can help you with. And it may be they might have $50,000 to invest, but if they want it back in 2 years, there's anything that we do, we have no guarantees that in 2 years' time that they would be able to take their capital back and then look to, what was their objective for this money? If it was for, I'm looking to buy a property in the next 12 to 24 months. I don't want to tie that up in an investment because that's not the right thing to do for the client. So it's always important to understand what's their objective with this money that they've accumulated in their bank, what's their time horizon around the investing, and then what's their propensity for risk. What is their risk tolerance?
In case you have a particular client that is requesting a short-term investment, let's say 1-2 years, so the products that will be available is the fixed rate, interest rate, fixed rate, notes?
Absolutely. Okay, so you could look at a fixed term deposit. So depending on the client, if it's right for the client that they should have a portfolio bond, and the reason why I'm doing that is, or even a platform, you can do fixed term interest, and I'm not talking about a note here, fixed term interest on a platform. So I'll briefly cover off on the platforms that we do have. So with Momentum, they do offer fixed term interest deposits. With a note, if it's maximum 2 years, okay, and it's fixed income, my capital's still at risk. Okay. Now, you could say, okay, well, what's the market conditions of where we are right now today? Okay, you would say that we are waiting to enter into a bull market, so a good market cycle. Will that happen this year? They don't believe, when I say they, I'm talking about analysts, financial analysts, around how many interest rate hikes drops will be this year. At the start of the year, they were speculating maybe it could be 6. Then, of course, once the fact that inflation in the US came out and it was higher than expected, all of a sudden it's like, oh, there's not going to be 6 rate drops this year. And then, yes, this week, the market, so much volatility has been around. So, if someone said to you, hard and fast, I might need this in 1 to 2 years, then even if it's $50,000 or $100,000, it's not the right thing to tie them up in a structured note. Because as much as it can auto-call early, after 6 months, what's going to happen in 6 months' time from today? I don't know. Will China invade Taiwan? Who knows? That's too much risk. So, you have to be really clear to the client, and when they say short term, and you go, for your objective, can you not access this for 2 years? If it's a 2-year note, not access this for 2 years. And if the client wavers on, then it's not the right thing to push them on that, because if it gets 1 year in and the markets have sunk further, is the secondary market value on that note, they will lose money. And I can tell you, it's not a great conversation when you're having to talk to a client about a note and we've got a couple of notes this year, but I had one note last year with a client having to tell them that they only got 50% of their capital invested in a note. It's a difficult conversation. But you do get through, and that client continues to invest in notes because he was prepared for the risk. Fortunately for me, he's a client who is quite high risk, but he has a blend of other fixed income guarantee notes, as well as he's got some other very high risk notes, but he was prepared for that. He could afford to lose that because he's also still, he's quite young, he's in his 40s. I'll probably say that because I'm older than that, but yes. Sorry, I'll come back to you, Lewis. Sorry, Andrew.
So, aren't there other strategies that we could incorporate, though, in that scenario? For example, I would consider if somebody just wanted to get a little bit more yield, maybe I would consider a low duration bond fund type strategy. You know, it seems to me that there's something you could do with that money over the course of 1 to 2 years, whereby you're not putting them at a ton of risk, but yet garnering them a little bit of yield so that they can do better than what they would just by sitting in cash.
Yeah, you could absolutely look at different types of government bonds, but looking again in terms of, you know, when's the maturity date, because even when you invest in government bonds, is there still your capital value can still go down. Absolutely. But definitely fixed interest, and some of the platforms do offer fixed term interest, which you can then consider. And with that, you can then, in terms of, you might go, okay, well, that's great, and it's okay to go, how am I going to earn off this client? Yeah. Okay, you deserve to be paid for the work that you do. Okay, so in those instances, is that you ensure that you put in a service fee around that platform.
Yeah.
Yeah.
And that's the point, though, isn't it? Because if you're setting up a fresh client on RDAM, for example, and you charge them $1.5 grand for their 100 grand to go in as an admin fee, and then 1% on top, you know, the purpose, like you say, of doing that process rather than just going to get 1% less through their bank is like what's best for the client.
Yeah, and also bear in mind that if someone does have a short term and you're not good, and the only thing is in terms of the service fee, one thing you might consider there, Alex, is you don't have to charge the client for the money going in.
Yep.
Yeah. So, you know, you can charge them the 1% service fee, and a client will understand that. And, you know, Mr. Client, you understand that if you're investing $100,000 and I'm looking after this for you, even though it's only going to a fixed term deposit, but what I'm able to offer you is this, which is offering more than what's in your bank, would you not agree that in terms of what this value is that I'm actually, how I get paid is actually a service fee?
So do you not set minimums for your teams then, in terms of what you do on entry fees?
No, I don't have that, you know, when someone sets up an ARDM, they have to charge a fee. Now, if I was setting up, for example, if someone was just interested in notes, let's say their time horizon, my time horizon is 5 to 6 years. I've got this lump sum, and it's 20,000. I probably would straight away, in terms of that investing, go through, okay, well, I'll probably look at a structured note, you know, fixed income structured note, duration's only 2 years, he said 5 years, but I want them to receive the income. Because every quarter they see that credit going through, they see that it's working. And therefore, it's amazing how when you go back and see them, it's amazing how people find more money. Now, you've done the fact find, you think you've recorded all the information, but do you verify the financial information that they give you on a fact find? No, we don't. And, you know, the key element is that when you do go back and see a client and they can see their 20 grand is working, you might just be surprised that all of a sudden, wow, I've actually got this other money that I didn't tell you about, and, you know, and now it's 50,000. I like what you're doing, and I'll pick on structured notes because it's quite straightforward, and you've already done structured notes training. I would like to invest this, but I see this is working, and maybe I could, you know, I'm prepared to put a bit more risk around some of this money. And then you might look at the variable notes versus the fixed notes. Again, look at the stocks, research the stocks, think where what's the market conditions today? What are analysts forecasting over the next 12 months? Because, you know, the reality is none of us have a crystal ball. So, of course, we don't know what's going to happen in 3 months, 6 months. But the key thing is it's always good that you might already have communication that you receive from different investing websites. One site I use, which always gives an analyst forecast, is Tip Ranks. I realise my accent there might come out slightly wrong. I'm not sure if you're familiar with it. Tip Ranks.
TIP?
Yes. Yes.
Sound it out.
Yeah. Well, in New Zealand, we do say our vowels differently. Okay, so on here, you can actually, you can sign up for free. If you do too many searches in a month, you know, they do have a subscription service as well. But you can put in the code for any particular stock. It will tell you whether analysts are saying it's a buy, it's a hold, it's a sell. It will tell you from which institutions the analysts, they'll tell you how many analysts. So they might say there's only 12 analysts who have an opinion on this particular stock, but they will also give you a price point outlook for the next 12 months forecast. It has on there the earnings reporting date. So down the left-hand side of it, where you can go and find additional information, so you know when the earnings reporting is. So if you are looking in terms of lump sum investment that you're looking for a client, and you happen to be, because it's maybe 5,000, 10,000, 20,000, and you think, okay, well, let's just get them started. Let me show them that working with myself, I can actually help them grow their money by doing a fixed income note first. And with that, if the fixed income, if it's around some stocks, we had one that closed yesterday that was 2.5% per quarter for USD, is those stocks. So the one thing is when you look at a stock, look at when a note closes. Then go and look at the stocks that's in that note to see when their earnings report date is, okay? Because just remember, we have a strike date that was yesterday. The issue date then happens next week. So there's always risk if an earnings reporting is the following week that a stock then drops.
How do notes handle then year-end capital gains or dividends that are paid out of a particular stock, or would they avoid those?
No. Okay, so you have to remember that a structured note is not buying directly into the company's stock.
Right.
Okay, so it is actually based on the volatility index.
Right.
Okay, and then those stocks. That's why, when a stock, when they have their earnings, any dividends, nothing then changes. It's all about where is that stock price or the perceived, because you've got to remember, it's what, people who are buying stock or quite often we're impacted a lot by, obviously in the US, all the traders who perhaps are looking after pension funds, and when they're doing the bulk buying around various different stocks, that, in terms of look at those swings around stocks. But it's all about the stock price. So you can see, you can go on, look at the stock, where is it today? Okay, what was the strike price? And when a stock starts to get down, it's kind of like, well, how much recovery do we need here? Yeah.
So would you typically not see like a J&J in a strategy like that? Because a J&J is known for, historically paying the most consistent dividend over time.
Yeah. So
when its share price, after it declares a dividend, its share price is going to drop.
Correct. Because it's paid out more, it's actually just paid out a whole lot of money.
Yeah.
Correct. For someone like Johnson & Johnson, I have clients who I just invest in the stock directly in a portfolio bond, Okay. So if you're after, to get, and the dividend, the dividend that you earn through a stock, that offsets at times the drop in the stock price. Yeah. And it's a cycle, right? But of course with notes, then they're impacted if there's negative news. Yeah. Okay, it's the sentiment around the stock. And if the CFO says the forecast is looking like we're less growth, it's the stock gets hammered. Yeah. And it really is just market sentiment around that. Yeah. But those type of, if in terms of wanting to invest directly into a stock or equities where a client might want to get earning dividends, because another great way to earn income is, it's probably a good segue in terms of when it comes to platforms what we have available. Okay, so realistically, in terms of platforms where you might get involved, there's plenty of platforms out there.
Yeah.
Who here drives to work? Yeah. You hear Swiss Quote advertising all the time. But I'm sure everyone's heard of interactive brokers. Yeah. So just remember, and you know, when someone is talking about a lump sum investment and they go, I just want to invest in ETFs, okay, and if it's not the right thing to put them in a portfolio bond, then you've got to put the client first. And the reality is, just ETFs, look, Mr. Client, there are plenty of platforms out there. I'm not a day trader. I help my clients about creating wealth over the medium to long term. And you need to walk away because, you know, someone just wants to invest in ETFs when you think of the cost perspective of it.
But you can hold ETFs for long times, and if you compound the dividend payments, they can be really lucrative for a client.
Yes, but for a client and the platforms that we have, it's too costly.
Yeah.
Okay, that's what I mean, Mr. Client. Don't ever say to a client, and only give them one option. Okay, so if you say to, you know, if a client only wants to hold ETFs, from a cost perspective, Mr. Client, is your best option is to go and look at some trading platforms. The platforms I have offer more than just ETFs, and also with that is I provide you advice and direction and assist you with that. And of course, to work with myself, there is a cost. But if you only want to do ETFs and you're not prepared to take my advice, then there are a couple of platforms out there. They will typically come back to you and say, what platforms? Make sure you always get a minimum of 2, okay? You can say, oh look, you can consider looking at this platform that I can actually help you with. Alternatively, there are 2 other platforms out there. And the reason I say that is because if you only offer one, and then they go and they start using, for example, interactive brokers, and they lose money, they're going to come back and they're actually going to blame you. And they're going to say, but you told me that platform, so I went and used that platform, even though you had no control over that. So it's always important to always offer at least 2 alternatives, so then you can never be held accountable for taking a client down one path. Because you don't want to complain like that when we have no control over how they then look to invest. But that's the kind of client I would, after 6 months, prospect, I would actually look to reach out to again to see how they're going. Because quite often when you leave people to do it themselves, is A, they don't get started, or B,
They lose money.
Correct. Money is emotional. Okay, so as soon as they see the market go down, they want to sell. But of course, we all know is that you actually hold. And if you've got some extra money, buy more. Yeah. But that's because we help clients in terms of we're making a head decision. We're not making a heart decision. So, you know, but absolutely is don't give up on someone who you might say that, because there could be further down the track always an opportunity to go back to them. It could also be, let's say they didn't have a lot of money, that they've accumulated some money and they're going to retire in an area where a portfolio bond becomes important. Because then, once they've accumulated sufficient in terms of on their platform, you can absolutely help them transfer the assets into a portfolio bond, and they're not having to scrounge around to try and find whether it's 45 or 50,000 pounds equivalent to then set up a portfolio bond for a lump sum. It's another way for you to then put onto your pipeline is, okay, this client, you know, he seems to get ad hoc payments from, you might get some bonuses from work, or his spending is erratic, but he does lump sum some small amounts of savings. I'm going to make a note of that and I'll put it into core, that I need to reach back out to him, because he might then be in a position to actually then set up a portfolio bond because it's the right thing for him. And then I can move his assets in so he doesn't have to sell anything. And then you're able to assist that client going forward. Okay, so obviously I've talked about market conditions, so you know, you've always got to consider where's the market. So when you're looking at lump sum investments and what's right, so we now understand what's the client's risk profile. If a client says to you, I'm a 2, okay, so obviously, you know, in terms of 1 being the lowest, 10 being the highest, and you say to them, so where do you see yourself on the risk scale? So, Devi, where do you see yourself as a risk scale?
7 or 8.
7 or 8, yeah. Age probably plays into that. Yeah. Andrew, where would you see yourself on the risk scale?
Well, I would say moderate growth, so you
Yeah.
probably call that a 7.
Yeah, yeah. And that's the thing, is just because someone is older doesn't mean to say they're more low risk.
Wait,
Okay.
you just call me old?
I said older. I said older.
Sorry.
Didn't say old. I said older. Okay, so you know, that's really important, and sometimes we forget to ask clients about their risk profile because we're already thinking about, yes, I've got a sale here, and therefore I know how I'm going to do this, and we stop asking questions. So obviously, yeah, we know, okay, yeah, so we're looking at risk profile 7, okay, so you've got some propensity to lose. Then what is your time horizon? When are you going to need this money? Do you need it in the next 3 to 5 years, depending on the amount? You know, if it's a smaller amount, you might just be thinking platform. Well, there is no time horizons with platforms, okay? You can put money in today and you can take it out tomorrow. But what is your time horizon? And then just consider, where are the interest rates? Where's inflation? What's the geopolitical? I mean, geopolitical landscape should not come into play when investing. Well, it shouldn't come into play, but it does. Okay? I mean, if we could rewind the clock and go back to when Russia invaded Ukraine, it was a good time in the market at the end of 2021. And it's been a challenging 2 years. But the challenge creates opportunities for us, which is great. Okay, so in terms of platforms that we are able to help clients with, so Momentum. Is everyone familiar with the Momentum platform? No? They'll probably curse me for going through and talking about the Momentum platform. Okay, the Momentum platform, it is based in Luxembourg. Okay, we have a platform team in Malta called Platform Queries, which Chantal Dixon heads. So I have quite a few clients who have platform accounts. If you do a platform in this region, in the UAE, you have to do it under the De Vere license for Mauritius. But there was a time in the last couple of years where Momentum was not an option because the license here. However, if someone's in Saudi, you absolutely can do Momentum because it's under the Mauritius license. The cost of a Momentum platform is 62 euros a year. So this is the classic. There's 2 types. There's classic and there's asset master. Classic, when I would use a classic platform, would be for someone who said to me that, and I kind of do base this on age actually, that when someone's only going to do invest in notes, there's 2 options I look at, okay? I'll come back to Momentum. There is the Momentum platform Classic or the De Vere investment app. Who's downloaded the De Vere investment app? Great. I strongly recommend you download the De Vere investment app. It's free to do so. Go through the onboarding process, okay? Because it's important you understand that. Because if it's right for a client with the De Vere investment app, and you could say it's the quickest way to get started for if someone's got, say, $10,000 to invest, to get them on the De Vere investment app, and they can get started and then look to then invest that in a structured note, it is the fastest way. Technically, the account can get up and running within, I would say, 48 hours. But download it, it's free to download. You'll go through the whole onboarding process where you have to do your passport, you have to do your proof of address, you need to do a selfie, and then you do your source of wealth, as well as the tax certification through it. It just helps you understand what a client will go through, what that journey is like. Getting a client to download that, even if they never trade, that client or prospect will then be recorded against you in the system as a client. And no one else in this region or across De Vere can now call that client, that prospect. So it's certainly a good way to have someone assigned to you pretty quickly. On the De Vere investment app, if they move to another country, you retain them as a client. You don't, if they didn't have an investment app, say for example, you had a client, you set up a regular savings plan, you've done the training on that, regular savings plan with them. If they move to another location that we actually have an office, that client will be reassigned, okay? Where that changes is if they've got, let's say, well, if you put a service fee around a regular savings plan and it's under a DFM, then you will get to retain the client. If it's just a normal service fee when it goes to another region where we have an office, you will lose the client. However, you'll continue to earn from that client, from the next person. You know, you then share the commission from that. With the Devere Investment app, you will always have that client. So please look to go through, and next week I'll come round, I'll find you, and look to see who's actually going through and doing it. But the other side to that is then you can see what's actually available, because it's not just structured notes that are available on the investment app. We do have ETFs, we do have some equities on there as well. What you have to be mindful of is the cost of that for a client is very different if they just went to Interactive Brokers and invested in an ETF. Okay, so the cost around the Devere Investment app is there's a 2.2% custody fee annually, which is taken monthly. It's over to you whether or not you want to charge, well, the client can turn off the service fee. There's also a service fee on there of 1%, which is taken monthly, but the client can turn that off. Now, if you've got a client, I've actually got a few teacher clients who actually aren't in this region, who just they have like 10,000 on structured notes where I've done the investment app for them. Because every time they invest that money into a note I earn, I actually take them through the steps on how to turn off the service fee, because I'm already receiving every time they invest in a note 2% of their investment. And for me, I feel as an advisor that I'm earning sufficient from that client, that I'm not on top of that. Now this is going to be a totally different opinion to other advisors, but I can't justify on top of getting 2% every time they invest their money to then also take 1% a year. But that's your choice. But there is a way that the client can actually turn off that service fee within the app. On the investment app, it's a minimum investment on structured notes of 5,000. ETFs, funds, minimum investment is 10,000. Right, now I'm going to come back to the classic Momentum. So with Momentum and the classic platform, one aspect that I like about the platform over our Devere Investment app is through it, okay, is obviously, okay, so the cost is €62 a year, which is taken every 6 months. The custody fee is 0.10% for structured notes. You can invest in funds on there. Now, if you've got the classic account, on average, the funds cost around 5% entry fee, but there's no exit fee, okay? With the entry fee, with the 5%, you earn 2% commission. So if a client does go down that path, not all clients that have a classic Momentum account actually invest in structured notes. Some are quite happy because it's been around for so many years that, you know, they have invested in funds. There's over 500 funds on there. If you haven't got a Momentum account, I recommend, if you've got clients, you should already have a Momentum account that you can access and you can see your clients' funds. What I like about the Momentum Classic account, as well as the Asset Master, is you can push recommendation of notes to clients. They get an email alert, they click on a link and they can purchase a note. That is so much efficiency. And so then also when you start to get repeat business, it's just that in the background makes it so much easier. You're not having to contact the client and so forth. The difference between classic and the Asset Master. I have a couple of clients where I've got the Asset Master for them. Asset Master is where a client was looking to just purely invest in funds at a particular time. We didn't have other options. So they've got a mixture of notes and funds, and with that there's a load fee of 3.25% on cash in, but there's no cost, there's no entry load, no exit load on any funds. They are then all zero. Yeah. With that, there's automatically also a service fee. So again, you've got the 1% service fee, and it gets paid quarterly. So unlike Arden, which gets paid out monthly, it's paid quarterly, along with portfolio bonds that are with institutions is paid quarterly.
And how much is the service fee?
1%. Yeah. So that's the Asset Master, and that again, the Asset Master and the Classic is with the institution Momentum. But on there I've got some clients who've got some funds as well as who've got some notes. And then the third platform that we have is Arden. So, you've got a few Arden clients, yes? Alex, have you set up any Ardens?
Not yet.
Not yet. Kareem?
Yeah, I just got.
Yeah. I'll be quite frank, I have one client that has an Arden platform. I don't do Arden. And I had a client that set up an Arden, and all they could see was the cost going out, so they closed it down because they held money there they didn't want to invest it straight away. They wanted to hold the money on Arden and then look to invest. And of course, when you go a couple of months in, all they've seen is costs go out because they haven't invested their funds. But with Arden, it will depend on your manager whether you need to, in terms of if you're putting a percentage on the amount of money that goes in, whether or not you're putting a percentage on each time that they buy a fund, because you can also do that. Then of course you've got the admin fee from Arden, and then your service fee as well. And with Arden, you do see that residual income coming through each month. So it is another good option to build AUM and then to be paid on those service fees. And then there are different costs around buying funds, which are more around admin costs versus, if there's a entry fee to buy a fund, of course there's that cost, but there's also the transaction cost also from Arden. So just be aware of what the costs actually are for setting up an Arden, but you can pretty much invest in anything on there. And Arden also has fixed term deposits as well. But like I mentioned, Classic, Momentum, or you might want to do on Asset Master, Momentum, it also has fixed term deposits as well. For 1, 3, 6, 9, 12 months. It's just a matter of you having to engage through the platform team for them to ask Momentum what the rate is if you go down that path. But you can certainly look to do that under the Classic or the Asset Master. If someone's just going to fixed term deposit, I'd probably do the Asset Master, because again, it might get to a point in time when they go, you know what, I don't actually need that money now. What do you suggest that we look to invest that money in? So essentially, in terms of the different platforms that we work with, obviously Arden, Momentum, and then the Devere investment app. Is there any questions on that? No. No? Any questions around lump sum investing? No?